a 2-for-1 and a live for the bonus winning pro. Thank you so much. Yeah, I appreciate that. Thank you so much for coming onto the live stream. As promised, I will do this more often. I did it now yesterday, day before yesterday, and I will do live streaming basically now Monday, Wednesday, Friday, and Sunday as good as I can. With the podcast, I can promise you all guys the exact date when it comes out. Live streaming, sometimes life gets into the way. I'll try as much as possible. Hi Bram, how are you doing? Man, if hit me up on Telegram, I can bring you up on stage if you have time. That would be awesome to have you joining spontaneously if you have the time to. Would be really awesome to have you. So basically what I'm gonna do is live stream as much as I can, sometimes bring in guests, sometimes bring in other things, and this is kind of my time to make sure the things I learn from the podcast I can also share with you guys, and I can just broadcast it out to you and make the best out of it. And so I have every time I do the podcast, every time I do the live stream, I want to make sure that I do a really good job in bringing the time chain in there. And I will share with you guys what I mean with that is, with every time I do a live stream, I want to, in the first time, do the time stamping of this show. Right now, 918216. And one thing I just realized right before we did the live stream is, right before I did the live stream, I had a podcast, and I realized something. We are about very close, not very close. We are kind of close to the 1 millionth block ever mined. If you think about that, we've come so far that we came to 918,216 blocks. Now, we have 16 years in our bones with Bitcoin. We have come many, many obstacles. We have overcome the obstacle of internal wars. We have come the obstacles of what should we say? We've overcome so many different obstacles. Oh gosh, and now it's not live. We have just hit a block, a new one, the 918th, 217th, and we have overcome so many different obstacles in the Bitcoin life cycle. And now to be so close to the 1 millionth is just like absurd for me. And so this is something that I'm really passionate on, like the 1 millionth block. Oh gosh, we're hitting a new block. Maybe we come sooner to the 1 millionth block. So this is the episode now happening at block 918218. And now the big story of this episode is basically the big debasement trade. What do I mean by that? We have seen financial institutions, institutional money, companies. We have seen high net worth individuals talking a lot about what is actually Bitcoin and how can I incorporate that. That is a trend that's going on now for basically 5 years. So since 5 years, we've seen that institutional money is slowly flowing into Bitcoin. I mark the beginning of that with 2020 when Saylor and when institutional money really came into the game. But we had institutional money before. Like this is always something we have to make sure to mention. We had funds, big funds, already invested in Bitcoin in 2013. When you think about Jamaat Papalatia, like I have no clue how to say his name, but we had him in the first show on Monday mentioned, and he mentioned that he invested with his funds already in 2013. So we had, since the almost very beginning, institutional money in Bitcoin. This is not something new. But the official start, in my view, was 2020, where things really start moving, because a publicly traded company that had nothing to do with Bitcoin, MicroStrategy at that time had nothing to do with Bitcoin whatsoever, bought Bitcoin. And this was unprecedented. I remember the news story that when it broke $50 million who was it? I think PayPal. Was it PayPal? I'm pretty sure PayPal. PayPal is buying $50 million of Bitcoin. And this was a huge news. like $50 million. Now, if any company buys $50 million of Bitcoin, nobody cares. It's like, what are you doing? Like, this is nothing. Now we are saying like at least a few $100 million that you have to allocate, or it's a very known company. So, for example, if Apple would buy $50 million of Bitcoin, and that would definitely make headlines, but they would buy a lot more if they actually bought Bitcoin. So with all that being said, we now are in a period of time in Bitcoin where we have more and more institutional money and less retail money. And so what does this actually mean is that the mainstream is slowly catching up to us plebs that have seen it way before them already, that the fiat currency system is probably not the best system we have. And so just to give some of you all some charts to the feeling that we have. This is something I've seen today. Oh gosh, I shared the wrong one. I've seen that today. It has taken the United States 100 years to do what Rome did in 250 years regarding the currency devaluation. Now, to be clear, those two times cannot be exactly compared. And I think he mentioned it here. For US dollar, they showed the CPI data, which I think it's not inflation. Like CPI is just like a vanity metric. Like it doesn't show us anything. It doesn't do anything for us. So, but this is the data they're kind of using, the CPI data. And then we have also the percentage of silver. So like how much is it there? And I think it started, what was it, at 95% silver and ended up at 5% silver. Crazy devaluation from there. So Rome versus United States. United States took 250 years to do the same than the United States did now in about 100 years. Now, when we come, and especially like 1971, obviously it was like a big inflection point towards that, where the steep curve downwards got even steeper. But there's a lot more. I want to show you guys this. This comes not from some random pleb. This doesn't come from like a shadowy super coder. How does Christine Lagarde call us? This comes directly from BlackRock. They had a report, and for the people that want to check out the report, here is the link on BlackRock. They had a site on there, and I found it super interesting. They read there, can Bitcoin eat away the US dollar reserve status? That BlackRock is asking that question, I personally love. Like this shows that the mainstream is kind of catching up to what Bitcoiners already saying since 15, 16 years, probably way before that. Sound money advocates have said that so long ago already. And now the salespeople from BlackRock, they're knocking on all the money back doors, and they're saying like, buy Bitcoin because the United dollar might not be what you think it is. And so that's why it's a big deal. So they're saying here, the US has benefited from the dollar serving as the world reserve currency for decades, but that's not guaranteed to last forever. 100%. The national debt has grown at 3 times the pace of GDP. This is absolutely crazy. Like the national debt has grown at 3 times the pace of GDP since Times Square's debt clock started ticking in 1989. This year, interest payments will surpass 952 billion, exceeding defense spending. By 2030, mandatory government spending and debt service will consume all federal revenue, creating a permanent deficit. Now, we are adding about $1 trillion of debt every 100 days. So in a year, we're adding more than $3 trillion of debt, and that's just the US. I'm not even talking about what the ECB is doing in Europe, what other central banks are doing all across the world. This is just the US, and this is supposed to be the safest currency. That's supposed to be the dollar reserve that kind of is better than anyone else. And so how we look at that now is, okay, if the US doesn't get its debt under control, which I don't think is a possibility. Like no president, nobody, no central banker after Jerome Powell could ever make that a better thing. So if the US doesn't get its debt under control, if deficit keep ballooning, America risks losing that position to digital assets like Bitcoin. I love that, because that's the salespeople of BlackRock going out to their clients saying, hey, we might lose the global reserve status for the US dollar and Bitcoin might replace it. And this is coming from BlackRock. That's not coming from like a random pleb like us that's saying like, oh yeah, like it's not a doomsayer gold bug that has been saying that for years, even though they're right. It's BlackRock saying that. So like that's, I think, a huge deal. So now I just want to quickly check in the comment section. I will always like keep on checking with you guys, because it's fun doing that work. Keep doing the good work, fam. Thank you so much, man. Bitcoin for the Hood podcast. I have to check it out. Robin is an American. Yeah, I've been 2 times to America, but with interviewing so many Americans, with getting in touch with so many American people, like most of my audience is American, most of my guests are American, most of my partners like Microseed or simplemining are American. Coin Vigilante also is American. It really almost made me. It almost made me American. So this is yeah. Thank you so much, also Michael, for the super chat for the $2. Really cool. Then Uncle Larry knows what time it is. Lol. Yes, I do agree with that. So coming back to what BlackRock is now doing. BlackRock is executing that strategy extremely, how can I say, like extremely great. They are on a mission. So they clearly have, this will happen multiple times. I have to get used to like sharing my screen. They have been used to actually, so they have prepared this move into Bitcoin long before we even knew it. So I think I had 2 or 3 episodes actually on this topic. When you think about BlackRock came into the Bitcoin scene in 2024 with the ETF, that's not entirely true. We know for a fact that they have been hiring digital asset people, like crypto people, Bitcoin people, long before that. I think the earliest was like 3-4 years. And there are some reports and there are some signs that they might even started in 2012, 2013 already, kind of looking at it and kind of forming small departments within BlackRock and seeing like, okay, what can we do with that? What does this mean? And they want to stay on top of it. So they are coming into 2024. We can see here the chart also starts in 30th of January 2024. This was the official start date where BlackRock came into the game, but they planned it way before that. And that's why their execution is also on point. They have been getting so much inflows, and they have been in, and as Simply Bitcoin says, BlackRock just bought, and this post was, today, just like yesterday for Americans, just about 14 hours ago, BlackRock just bought 7,400 Bitcoin. Now only a little bit away from holding 800,000 Bitcoin. And so this is kind of amazing of seeing how huge they actually already are, and how big the inflows are. And this is, to be really fair, it's not their Bitcoin, obviously. They are investing in case for their clients, but they have been on this strategy for a long time. Now, there's something bigger happening that I think is really interesting to see. But before, I want to make this, there's some really interesting interview from Matt Hogan. I found it very interesting. And that's also how I look at the debasement trade. And he's kind of like leading towards that. I will play that, and hopefully you guys can hear that perfectly.
Of the year. There are two things that are going on. One is that the debasement trade has become the hottest trade on Wall Street, right? JP Morgan is writing about it. Everyone is suddenly concerned about fiat currencies. And so they all want to get exposure to the two best plays in that space, which are Bitcoin and gold. For what it's worth, I think that fact accelerates into the end of the year. One thing people don't think of much is that when institutions and financial advisors sit down with their clients at the end of the year, they want to show them that they had the hottest trade of the year. Last year, they wanted to show them that they owned NVIDIA. This year, they're going to want to show them that they own Bitcoin and gold. And so I think that's going to drive additional interest. The second thing that's driving results.
This is such a big thing. I actually thought about that a lot. When you have financial advisors, they want to look good. They don't want to be at an annual meeting with the client and the client asking them, oh, like, why did you not buy Bitcoin? Like, I heard from all my friends they bought Bitcoin and Bitcoin went up a lot. So financial advisors, like those at ETFs, like those at BlackRock, like those at Bitwise, they have to look really good in terms of I've bought the thing that was the hottest this year, and I have also diversified. I have done all the great things, and so it actually becomes. Yeah, exactly. Like Michael says, it becomes a career risk when it comes to Bitcoin for financial advisors, in the future also for CFOs. We have had Bitcoin for now 16 years. A publicly traded company, Strategy, had Bitcoin now on the balance sheets since over 5 years, and it had outperformed everything else. And so from a financial advisor perspective, from a company CFO perspective, if they don't look at Bitcoin and not looking at that like, oh, like we should do something with that, they could get into trouble. Now, with CFOs, it might even be a little bit different, where they look at the speculative thing of Bitcoin. It might be a little bit early. And so this trend that we are now seeing starting to see with Strategy being in there now, almost 200 publicly traded companies having a strategy like that, is still very early. So for a CFO of Apple or CFO of Amazon to come in and make the same kind of game plan, it still takes a while. It probably takes a company like Meta that is founded, but that is still led by the founder, to really make a difference. And so this is still a very early game, but for financial advisors, it's a little bit different, because they are advising individuals, and they're advising individuals that might talk to the neighbor who is a Bitcoiner, that might talk to someone on the internet who's like, oh, like they're all saying about Bitcoin in October and it all went up. I even heard it on CNBC. Like I've shown on Monday on CNBC, they talked about how October is now around and Q4 will be huge. Like, how could a financial advisor not put this in? And how BlackRock also amazingly actually puts it to their clients. By the way, just like making a disclaimer, I strongly encourage everyone here in the stream to have Bitcoin in self-custody, not with BlackRock, but they're doing an amazing job advertising for Bitcoin exactly in those TradFi places where Bitcoin wouldn't come in anyways with self-custody. So, and this is then they're like, BlackRock is their kind of first touch point, and then they get educated, and hopefully in this long term, they get towards Bitcoins in self-custody. But they are pushing Bitcoin as a unique diversifier, as the debasement trade, as like, hey, the fiat currencies are kind of crashing down, and here's like all the data. Hey, the inflation is really, really high. Bitcoin is kind of the trade, how you can protect yourself against that. And I think this is a huge amount of TradFi people now realizing maybe that everything is going up is an indication that there's fiat currency, that the underlying currency, the asset, is just like completely broken. And this is kind of what Matt Hogan also gets towards when we listen to him.
Is just flows into Bitcoin ETFs. We've seen $3 billion in flows in the first 5 trading days of October. That's nearly a record for a 5-day period. We think Bitcoin ETFs are going to set a record for flows in Q4. We're seeing Morgan Stanley and other wirehouses coming into the space. So I'm really excited about that. Flows in the debasement trade, put them together, and Bitcoin's at 125 and going higher.
Okay, Bitcoin at 125 and going higher. The last time I talked, I think that your prediction for the end of the year was $250,000. Is that still in play?
$200,000. Don't round me up yet. We said we said $200,000 in December of 2024. And yes, I still think it's in play. What we will need in order for that to happen is to see this strong acceleration of ETF flows that I predict will happen. I think we could get $10 to $20 billion in flows in Q4 alone. If we see that and reasonable corporate and government buying, I think 200,000 is a reach, but still very much possible by the end of the year.
I think it's very much possible. 200,000 and 180K in play, as said Michael. Yeah, absolutely. This is who made that? Do you guys remember this like high IQ guy that said like 150K is like in play for Bitcoin in 2025? The one that like then shilled his second Bitcoin for Christmas Day. I think. Anything under 150K would kind of surprise me even. But honestly, nobody knows really where the price will be at the end of the Q4. I just feel like there is so many positive indicators for Bitcoin coming into this Q4, where it will be very hard to see Bitcoin not reaching a new all-time high till the end of the year, somewhere between 150 and 200,000, somewhere in between, depending on what's happening. The first now, and this is actually something wanted to cover also in the beginning, we are totally on track to hit the 200,000 this year still, because like the liquidity and the global M2 liquidity will be extremely high. I think there's a lot of money printing going on. Also on Jerome Powell, there's a lot of pressure, and this is just inescapable. As Lynn Alden says, like this. Nothing stops this train, and even if we don't reach 200,000 in the coming months, we will reach it then in the coming year. It's just something that you cannot avoid at this point, and this is just like it's just a reality at this point that we all kind of have to deal with, which is a good thing for Bitcoin price going up, but not basically. But yeah, like. Not so good for other ones. And this is also something I wanted to share with you guys. I've seen that from Jesse Myers. This is so interesting to look at, and I'm being obsessed too much with this chart maybe, but this is a really interesting chart that he put together. We all know he put the sizing of all assets together in 2023. So this is like this famous chart here where we show like Bitcoin at 2 trillion, like gold at 22 trillion and all of that. He put that same thing together in 2023, and this is an updated chart on 2025. But the more interesting part for me here is actually this, where we see where the money went from 2023 to 2025. And so we've seen that bonds are getting absolutely crushed. I mean, on absolute basis, like they're actually getting increased from 300 to 318 trillion, obviously, because the underlying currency is getting devalued overall with 6%, if I remember correctly, what Jesse told me. But the bonds are getting relatively weaker. Also, money gets relatively weaker. And this leads up that gold and Bitcoin, and gold has completely surprised me, actually, that gold and Bitcoin are going up quite substantially. And so the whole world, and this is kind of the debasement trade, all the things that I kind of want to lead towards is gold and Bitcoin as a sound money has been the safe trade now for TradFi. They're going out of stocks, they're going out of everything, and they kind of wanting to go to safe haven asset because people are feeling that there is something wrong. And that's how we have those headlines. Bitcoin leads record-breaking inflows as investor chase the debasement trade. This is why so many companies buy Bitcoin. And we have, I'm currently searching that. I have this somewhere. It is an interesting chart. Let me quickly, this is the gold has outperformed stocks this century. This is the chart of, so this was from Nico, and a fellow Austrian podcaster. I translated this because this was originally German. Good morning, and sorry to all stock savers. Gold has been performing significantly better since 2000, and we haven't even talked about Bitcoin yet. Obviously, Bitcoin has outperformed gold since 2009, or like since any period outside of, and maybe this year was even gold stronger, but any period over 1 year, Bitcoin has outperformed. And so gold has here the black line, and then we have the pink line with the S&P 500, and we have the MSCI World net total return with the golden line. And obviously the S&P 500 is doing a little bit better than the MSCI World, because the MSCI World is just like way broader and brings in a lot of underperforming assets and stocks in there. But gold has been absolutely crushing all stock savers. And this has been a trend that I wouldn't have anticipated it, honestly. Like, obviously in 1999, I was like almost only 1 year old. But if I would have put myself in the shoes of like, where's gold? And with Bitcoin, I thought that Bitcoin actually takes a lot more market share of gold and a lot more thunder, but gold actually has been ripping. So I think the first thing that actually Bitcoin is taking on, coming back to the Jesse Myers charts here, gold and Bitcoin together are ripping in the short and medium term. So first, the money flows from bonds and money, and maybe even like real estate and equities are kind of the ones that are getting screwed the most away towards Bitcoin, and gold is kind of the secondary aspect of that, where we have in the medium term, in the long term, the moves away from gold. And we have here also a Saylor prediction, actually, if we look at that, because Saylor uses basically the model of Jesse Myers and makes the assumptions on top of that. And he has been very vocal about that also. And he makes the assumption that we have Bitcoin towards 2045 with a CAGR of 29%, and gold with a CAGR of 5%, arts also with a CAGR of 9%, which is kind of surprising, quite high. Equities 10%, real estate 7%, bonds 5%, and money 7%. So Saylor, and I kind of tend to agree with him, even though Jesse Myers, I talked to him, he's not agreeing with that. The gold is actually taking a huge hit towards 2045, because it will just be so obvious for everyone that is investing at that time that gold won't be the future. And a lot of people now think, so when I think about people that are worried about fiat currencies, most of them actually still see gold as the main trade. If we think about TradFi, they're like, okay, I buy gold to be safe. It's my safe haven because like the stock market might go down. In 2045, to think, and probably long before that already, the story will be very different, where Bitcoin will be that main trade. Bitcoin will be the main, okay, I'm worried about the system, and I invest in Bitcoin. And so this comes to the interesting point of why gold might actually, even though it's now going up a lot, it might not go up as much when it comes to 2045. And I think this is also what Seyler is kind of talking towards when we have the 2045 kind of thing. But maybe because of owning so many equities with strategy, he might also be a bias towards equities. But I think equities actually long term probably are better off than gold compared to Bitcoin, because equities in itself have companies that actually produce something for the world, actually produce products and services that everyone needs. And so when Bitcoin is the savings part, Bitcoin is the monetary system, Bitcoin is the safe haven, what is gold gonna be? The winner takes it all in that sense. And so I don't think there's a huge place for gold. There will always be value for gold. I just don't think it will outperform as much. So now this all leads us to the headlines that I've just outlined. So that people saying like this is the debasement trade, and this is already starting now, and like you kind of have to get into the trade. And this also, let me hang on for a second. This leads us also then to companies realizing that. We just talked about strategy. We just talked about Seyler. This honestly surprised me when I saw that. So this came from the Bitcoin Treasury Net. It's a little bit older. It's the 20th of September, so a few weeks old. New public company strategy now holds 71 billion in Bitcoin. Probably now, I think it's 80 billion. If I remember correctly, I think they are now over 80 billion already, making its corporate treasury the 5th largest among all publicly traded companies in America. This is this is so far out of spectacular for me that it's really hard to even say anything about that. If you think about where strategy was 5 years ago, it was a company that had a running business model, but it was not an exciting business model. It was not like the new Nvidia. It was not a new Tesla or anything like that. But they had one exciting insight. They had a CEO that had the foresight saying, hey, I want to invest in this thing called Bitcoin because I think everything else will go to zero against that. And so when we have now strategy investing in that for 5 years, which is not a huge amount of time, it's not like 15 years or anything like that, 5 years, and they are already from a from a very small company. I remember, I think they had 400 million, something like that, on the cash reserves when they first got into Bitcoin, like before they got into Bitcoin. I think the first buys for strategy was around 100 million, 200 million to 250 million. So now seeing the strategy treasury with 71 billion, and I think it's more like 81 billion at that point, and number 5 of all publicly traded companies. Yeah, thank you, Michael. This was 250 million. Now having them be at number 5 of all the companies is just tremendously huge. And so if you look back at that, who is in front? Microsoft, Google, Amazon. They're all under 100 billion. It is very well possible that strategy ends up being the number 2 this year. Not a lot has to be happened. Like we are now at 81 billion because this thing is old. It is from September 5th. From September 5th, Bitcoin, let's just see how much did we went up from September 5th. We went up 11.59% since 8th of September. So about 12% we went up since the 5th of September. So seeing that treasury playing out with strategy is just purely amazing. And they are now at probably 80 billion-ish around. And then having Bitcoin going up around another 10, another 20% this year, another 30%. It doesn't take that much to actually get to the Amazon, Google, and Microsoft. Might not happen this year, might not happen like in the Q1 of the next year, but it will happen at some time within the next 12 to 18 months, I guess so. And so having then strategy being basically the only company outside of Berkshire Hathaway, which always has a lot of cash reserves, having the biggest cash reserve, which is Bitcoin. Bitcoin is kind of a cash equivalent in that sense. Sitting there, and the only real strategy the last year was Bitcoin, and then figuring out more interesting ways to actually buy Bitcoin. That's tremendous. Like I cannot overstate how big of a news for me this one chart is, and how big of a news this actually will be in 1 year, 2 years, when strategy sits at number one outside of Berkshire Hathaway, maybe. And even Berkshire Hathaway, like they have a lot of cash. That cash is burning. Obviously, they hold also a lot of companies. They hold a lot of great companies like Apple also. But honestly, strategy might overtake Berkshire Hathaway within like 5 years, within 10 years maybe. So like this is, they're building a war chest, and it's just becoming bigger and bigger. So let's look a little bit at the comments here. Oh gosh, there is no second best Austrian podcaster. Nico is great. He's amazing, but he's making German content, not English. Hello, Daniel. Sir, thank you so much for showing up. It's a pleasure having you here. Yes. 74 billion is the strategist war chest currently, not 80 billion. Okay, yeah. Thank you so much for that. Strategy build a Bitcoin yield curve with their preferred offerings. Yeah, the preferred offerings, a lot of people are very excited about that, and like they should be. It's really tremendous what they actually have built over the years. Like I'm super pumped about that. But yeah, what else is going on? I found this really interesting video, and I think this is a very, it might be a big topic change now, but it is a very nice video, and I would just want to highlight that because I think it's something huge in Bitcoin that we don't talk as much about. Let me play that for you guys.
87% or so of the people on this planet live in a place where they either have a collapsing economy with a terrible fiat currency or an authoritarian regime.
I would pump the number up to 100%. So I think 100% of people live in a world where they have a horrible fiat currency, because I include the euro, the US dollar, and all of them in there. But I know where he's kind of coming from with the 87%.
72% of the world's population live under some sort of autocratic regime.
And this is something I almost get angry when I talk with people in Austria, in privileged countries, that say, oh, like, why should I take my Bitcoin in self-custody? Like, why should I care? I just put it on exchange. Like, I don't care. There are... So they don't see the use case of Bitcoin being a sovereign tool. They might see it as a luxury item of like, hey, I want to invest in that and it goes up over time. But they don't see the real use case of Bitcoin as a sovereignty tool, because they just don't live in that world. But it's a very small elite group of countries and people. We think, and most people that are listening to that probably are in those elite groups of countries. But actually, most people live in a state where it isn't that good, where they want to have a money that is not controlled by the government because they don't trust the government. And I mean, we also don't trust the government, but there is a whole nother degree out there for not trusting your own government. So I think this video is just showing it really, really nicely.
Our bank accounts were frozen, our funds seized, and financial censorship became just another tool the Russian regime used to silence us.
And not only in Russia, in Canada, in Europe, even the United States, like everywhere, banks accounts not getting opened because there's some Bitcoin things going on. There are banks account going closed. I have so many stories. I have so many stories on my podcast already collected from so many different people saying, I got my bank account closed because I had those Bitcoin transactions. I was actually doing that in 2022. I tried to get a credit just because I wanted to see how it is actually to get a credit with a Bitcoin bank account, basically. So I had, I wanted to buy more Bitcoin. I was like, okay, let's go ahead and have a credit. It was like 10K or 15K. It was nothing huge. And I wanted to make that a priority. I was like, I will make that a priority and just find a bank. I went through 15 banks. And the first 14 all told me there was those fishy Bitcoin payments going out, and that's why we decline you. And granted, this is just a credit. It's not like debanked or anything like that. But they declined the credit specifically because of the Bitcoin thing. And then the 15 bank actually approved on it, and it was a huge trade. It was really a good financial decision, even though I no longer want to do any debt thing. But yeah, we even have it here with Michael. Like he got debanked in Michigan, and this is such a huge thing in the Western world even. And then think about how people feel in where the democracy even works even less. It's just we don't talk about those use cases enough of Bitcoin. We talk a lot about like what are the inflows, like what is coming up with October in Q4, and this is all like fun. But having a savings vehicle that you can also not manipulate, having a savings vehicle like Bitcoin just being there for people to resist authoritarian regimes, it's huge. Now let's see what. Hey, Gary, thank you so much for joining again. Great to see you here. Non-Bitcoiners have too much trust in governments and institutions who really don't have the best interest at heart, especially in more privileged countries. 100%. This is like, if you think about the trust that we have in governments and in more privileged countries, I've seen it all the time. People don't want to take self-custody. People don't want to say like, oh, I take my self-custody because I can just keep it on exchange. It happens all the time. So I 100% get that point of people just don't wanting to deal with the hurdle of doing self-custody yourself or like with a service provider or anything like that, because they just trust the institutions. And there was, I know it's Austria, like most people from here are not from Austria, but there has been a quote, a poll made in Austria, seeing how much do you trust in the Austrian institutions? And it was around like 87%, which was huge for me. And so if you go around and ask people in privileged countries, how much do you trust actually in the police force? How much do you trust in the judges of this world? A lot of them actually trust a lot in that. And so what does this mean? They trust in those institutions so much that they think, oh, I don't need to care about my own freedom, which is a terrible idea. You should care about your own freedom. You should care that somebody might take your money. And I always try to make other points to them, because like they might not buy that like the government might turn on you, but they might say, hey, having self-custody is a lot better for security, even against hackers. So like having a bank account or like having the Bitcoin in exchange, no matter what exchange, like all exchanges are the same basically in that regard. If you have Bitcoin on exchange, you're being suspect to being robbed. Even if you have two-factor authentication, if you have everything on, you have a high risk of those Bitcoin just being taken away from the exchange. The risk of being hacked, the risk of being robbed of your Bitcoin declines a lot when you take it in cold storage. If you have if you have the Bitcoin in your own possession and someone has to actually break into your house, and maybe you have it distributed across multiple planets, not planets, hopefully soon planets, in multiple countries where people actually have to cross borders with you to get to your Bitcoin. So this is a huge thing. I think most people are not ready for the taking self-responsibility. I've seen it also. I made posts about that on my community post on Bitcoin, on my YouTube channel, and only 50% of them have actually self-custody. I think this is because most people are into privileged countries where they still trust in the institutions. And this is, in my opinion, a huge mistake. Just because you wanna have, I just talked about that literally on the podcast with Yoni Appelberg. There's this saying, you should never act out of fear. You should never do something just because you fear. And then you can say, oh, you Bitcoiners, you're just acting out of fear because you think you're getting banned. You think you're getting robbed from someone. But the real reason we are doing it because we love taking self-custody. There's an excitement. If I stamp my seeds, I have general excitement because this is my own. I can control that. This is excitement towards having control. This is excitement. This is acting out of love for yourself and for your future and not acting out of fear. And this is, I think, the huge difference there. But coming back, Gary had a comment. Do you really think all exchanges are the same? Rightly or wrongly, I look at the likes of Strike as being safer than exchanges like, say, Binance. I'm talking smaller balances, not instead of self-custody. Yeah, like the different exchanges are vastly different on so many different layers. They are different because Binance, for example, they store so many different tokens. They add a new token almost every week. Strike or Relay or Bull Bitcoin or any of the Bitcoin-only exchanges, they only have Bitcoin. So from a complexity standpoint, for IT security, it's like they only have to care about that. So they have more expertise and more focus on your Bitcoin. Then also you can make an argument, okay, who is a bigger target? Strike or Binance? Relay or Coinbase? The bigger target is Coinbase and is Binance. But then also they have a lot of more budget to make the security as good as possible. So if we compare, and as I did before, just from a security standpoint, which exchange you want to hold your Bitcoin at, I'm not sure if there's a winner. Like I would need to go ahead and sit down with the chief security officer of each exchange and say, what is your protocol? What are you doing? All of that to really say coherently, yes, this exchange is better than this exchange from a safety perspective of being hacked. I could not make that claim. So I just think like, if I cannot decide which one is safer, then they are just the same for me. Obviously, that's a wrong accusation. There's probably one that is a little bit better than the other one. But there's too many advantages and disadvantages from a security standpoint for each exchange. And so I would never leave a substantial amount at any exchange, because why would you? Like, why would you leave a substantial amount there? For me, you have kind of three buckets of Bitcoin. The first bucket is the one that you don't want to touch for the next, let's say, 5 years, or let's say 2 years, or maybe 10 years. It's a security bucket, the one where 80% of your Bitcoin should be in, maybe even 90% of your Bitcoin. But then there's also a bucket where you might say, hey, I wanna spend my Bitcoin. I wanna use my Bitcoin. I wanna pay my freelancers in Bitcoin. I wanna pay my coffee in Bitcoin. I wanna pay a burger in Bitcoin. Like, there should be a wallet that is easily accessible but doesn't has a lot of Bitcoin in there, and basically a wallet that you can easily just like, if I lose that, it's fine. It's basically like your wallet that you hold in your person. Like you have a wallet in your pocket where there's maybe $5, maybe $10, maybe $100, maybe $1,000 in there. And this is the money that you are saying like, oh, if someone robs me and takes the pocket and takes the wallet, like I'm fine with that. I rather give him this $100 that is in there than getting shot in the middle of the street. Like this is a very clear trade-off that I'm taking. But and this is very interesting. You don't want to have 100% of your net worth of Bitcoin in a hot wallet that is easily taken and you can easily spend it. And so this is like the two buckets where we have 80%, the high security thing, where you want to go as good as you possibly can with the security of the Bitcoin. Then you have the one pocket where you spend it. It's just a spending wallet. And this could be also an exchange. But I like to actually separate that. And then you have the exchange. And there are many different exchanges. There's, for example, exchanges like Strike, like Relay, like Bull Bitcoin that are Bitcoin only. And I always encourage people to go to an exchange that is Bitcoin only. But then there are also swapping exchanges that directly swap. They don't have a wallet. They don't have anything. They're just swapping their your Bitcoin to US dollars or euros, or they're swapping your euros to Bitcoin, and you just give them the Bitcoin and they give you the fiat back, or you give them the fiat and they give you Bitcoin back. And this is actually the ones that I like the most. So it's super easy in Austria, for example, to get from Bitcoin to the bank account within like 20 minutes. So I just pay a Bitcoin invoice, and then there's a service like bringing like oh gosh, I'm blanking on the name of the other one, like wave.space, like Bull Bitcoin is also actually offering that. So like the many of those players where you can just pay a Bitcoin invoice and they send you the money. And they just take a 1% fee. It is usually. Sometimes you can get the fee down to 0.5%, and sometimes you get better rates if you buy with like Strike, and under a certain amount it's free and stuff like that. I'm aware of that. But this is basically how I think about that, where you have those three buckets: the exchange, the hot wallet, but then also the main pocket, and those should be separated. Like you should not spend from your main pocket directly paying the coffee, because they see your UTXOs and they might see how much Bitcoin you have. So there's also this, depending on how you do the UTXO consolidation, but there's also a privacy aspect towards that. But that's with that we would start a whole nother aspect of that. Yeah, thank you so much, Gary, for that. Doomkit 1331. Yes, it was about time to start doing lives, man. It has taken me some times to actually start a live stream. Why don't you try to meet, I guess, as much as CEO or CDO of an exchange for us? Oh, or as much as many as possible CEOs. I mean, I do. Like I talked with Relay guys. I talked with all the people, like the Bull Bitcoin guys, but this is kind of the thing of like, why would you investigate what is the best exchange to keep your Bitcoin if you know every exchange is kind of flawed? Like it's a central point where you keep your Bitcoin, and then it's like, this is kind of like if you buy the most decentralized, the best global possible money, and then you give it someone else, like it feels wrong. So use exchanges for what they are used, what they are meant to be used, an exchange from fiat to Bitcoin, but don't use it as anything else. To this question, I get this question quite sometimes. I had Sailor on already, so this is. But I will have him back on. I will definitely have him back on. It's been, I think, a year and a little bit more, so like over a year that I had been on. But he definitely will come back. Really cool. Yeah. Then we are still with that one video. The 1 minute video takes us some time, apparently.
Our bank accounts were frozen and his organization was confiscated.
85% of the Afghan population didn't trust the bank.
I hear people say, well, there's no use case for Bitcoin. It's money that dictators can't stop.
They don't have a bank account, but they can simply...
I love that point from Gladstein. It's money that that dictators cannot stop. And we just talked yesterday about Christine Lagarde, and we talked about how she had so much anger at Bitcoin at the interview that we have seen yesterday. I don't want to play it again for the people that also tuned in yesterday, but basically she has been asked by Jordi. Jordi is like a random student in the Netherlands, and he was asking her about cryptocurrencies and Bitcoin, and you can really see like how bitter she was. And then the moderator even brought up Bitcoin chart since she last talked about Bitcoin, and it went up like 3 times as much as high. And then it was really interesting for me to see Christine Lagarde's reaction. But this was basically yesterday's live stream for the YouTubers. It's just on Twitter or like on my Robin Seyr live YouTube channel that I will delete at some point because I decided I want to go live on my main channel. I don't know why I wanted to not to go live on my main channel. Everyone told me I'm stupid. Why are you making a new channel for it? And they were all right. So I'm now on the main channel. But this is really interesting. Like people that are used to having a lot of control, like Christine Lagarde in the financial aspect, or dictators for that matter, they really don't like what Bitcoin is representing, because Bitcoin is representing that nobody is in control and everyone can use it. And those kind of neutral rule set, they don't like that much. But yeah, let's watch the video. Oh, Pam, you're too kind. I wouldn't call you stupid. Thank you so much.
Get paid if they have a wallet.
Activists that have been suffering repressions are now being held by this technology that is Bitcoin.
It's not about making profit, it's about survival.
100%. And this is kind of the conclusion of having over 600 different podcast episodes now. It's amazing that we're in a revolution, or a monetary revolution, where we get actually kind of paid for being in the revolution. If you think about any revolution in the history, there is a huge subset of people in this revolution that are losing everything, including sometimes their lives. And then there's a small group of people in the revolution that then take over after they won the revolution, basically the world, and then they are really benefiting from that. In Bitcoin, it's different, because in Bitcoin, everyone is benefiting. If you are in the Bitcoin revolution and you're just joining in as a pleb like I did in 2020 and just buying Bitcoin, you're benefiting from it. Now, you're benefiting even more if you go all in. You're benefiting even more if you're getting in touch with other Bitcoiners. I laid that out in the podcast multiple times, where we have those 3 pillars in Bitcoin. We have the first pillar that everyone gets, like it's the wealth gap. It's the wealth pillar. It's the one that you get more money by just getting into Bitcoin. You get more purchasing power. The second pillar is actually a little bit more harder to see for some people, as we kind of already said. It's the freedom pillar. You get the freedom to keep your money. Nobody can steal it away from you. You get the freedom to give anyone else your money, and nobody can stop from giving someone else the money. And then you also get the freedom of getting paid from anyone, anywhere in the world, and nobody can stop you. So these are the two pillars. And then there's a third pillar that I call the culture pillar of Bitcoin, where you attach yourself to the social layer of Bitcoin. And with that, you get more of the mindset of the early adopters. You get more of the advantage of the networking of the Bitcoiners. And so if you just have the first pillar, the wealth pillar, that's amazing. But also getting the second pillar, the freedom aspect of it, with taking self-custody, running your own node, being a self-sovereign individual within Bitcoin is tremendously better already if you just have the first pillar. And then the last one is the cultural aspect, where you can go ahead and say, hey, I want to launch a Bitcoin meetup in my local town, or I want to start a podcast like I did, or I want to just do something. And even if you just write a few interesting articles on Bitcoin, like that's all it takes for someone to see that, share that, and all of a sudden, like, a lot of people benefit from your thought, because maybe you have an interesting thought that nobody else really thought about before. So this is so important for people to understand. Bitcoin is a revolution that you're getting paid at, and the more you participate in this revolution, the more money you actually get paid. Like, indirectly, of course, Bitcoin is not paying anyone, but you get more purchasing power. If you think about the last 5 years, we went up from like 3,000, 5,000, 7,000 to now 125. It's tremendous. It's tremendous. So I can only encourage everyone to make sure that you're not only benefiting from the wealth, but also benefiting from the second pillar, and also benefiting from the third pillar of Bitcoin. And this is extremely, extremely important. And I think this one video of the Bitcoin Policy Institute, showed it nicely. Thank you so much, Michael. Man, thank you so much for $20. That's much appreciate that. Preach brother from Daniel. Yes. Tracy Forrest. Robin is live. Absolutely, I'm live. The first time on my main channel. I absolutely love it. Best from Munich. Marek, how are you doing? Oh gosh, I haven't seen you in too long. I feel like, Marek, you should come by in Vienna one day. Like everything gets cheaper when you price things in sats, and this is the main thing. Once you denominate also, and this is maybe something interesting also, once you denominate your wealth in Bitcoin or in Satoshis, you realize everything gets cheaper. And I don't have it even with me. I wanted to show my phone. I still have the iPhone 11, and I talked with many people already on that, because the battery kind of dies out now. Like, it kind of comes to the point where this, 5-year or 6-year-old phone is kind of on the point where I have to replace it, but I really don't want to. And I'm like, there's no chance that I'm buying the orange iPhone, this like new iPhone 17 Pro. No way. This costs me way too many Satoshis. Like, why would I buy that? It costs me so much money to get that. And what offer does it bring me? I'm just on my phone for like calling people and getting some text messages and getting some tweets out. I'd rather just have an iPhone 16e or like iPhone 14 or something like that, and just get this one, or get a new iPhone 12. Like, that's a great one. Like, get a new iPhone 12. It's probably a way better one than like upgrading to a new one. I already see how much it is impacting me personally, just denominating things in Bitcoin. I'm like, now October is starting. I cannot buy things right now. And this is, I think, something very important to note. And yeah, there was one more thing. When the shutdown is over, I think we blast over 150K. Could be very much be the case. Good to see you live, Robin. What a great show. Thank you so much. I appreciate that. Yeah, I am still very new to live streaming, and I apologize for all the small mistakes I make along the way. I hope you guys bear with me. I want to go live as much as possible. Monday, Wednesday, Friday, and Sunday is my current aimed schedule. And every time at 7:30 p.m. European Central Time, or I think 1:30 p.m. Eastern time it is. And this is kind of the time that I kind of settled on. And I'm really looking forward to just like hanging out with you guys 4 times a week here in the live stream. And I will always announce it in the morning of the day if I do it or not. Because sometimes I might be on a plane, or like I do something, or life gets in the way. So I will definitely do this more often. Just think about dollar SAT parity in 10 to 20 years. Yes. Oh gosh, thank you so much. Thank you so much, Michael, for bringing that up. This parity between dollars and Satoshis is an extremely great way of connecting thinking the future purchasing power of Bitcoin. If you think about every Satoshi being $1, if you think about in your wallet like that, and you switch from Bitcoin to Satoshis, so instead of seeing 0.1 Bitcoin, you see 10 million Satoshis, then you think about, oh, I have $10 million in my wallet, and then do I really want to spend, I don't know, $1 million on this new thing? Do I really want to spend like 500,000 Satoshis or dollars in that sense on the new iPhone? Like, why would I do that? And so thinking about is absolutely astronomically good. And this thank you so much, Michael, for bringing it up, because this is a really, really great point. Yeah, don't apologize for the mistake. Yeah, I guess that's the appeal, like rawness of me. You get me with all my flaws. You get me with all the things. Even though my podcast is actually also quite raw, there's very, very, very rare the case that I edit anything out. But we edit the long pauses in there. There's sometimes guests that take some time to like answer things, and then there's like a 5, 6, 7 seconds in there, and there's like this we cut out automatically. But anyways, it's very similar. So now back to another interesting video I wanted to show you guys. This just, I think, dropped today. Did it drop today? Yeah, it dropped today, actually afternoon, just a few hours ago. We have the new Gemini card, and this is and the point of this is not the card itself. The point of this is that they are advertising Bitcoin with this card is pointless, and then on the side they're saying earn Bitcoin, not points. And I think, as many other also pointing out in those reports, that this might be an amazing new way of paying people for their credit cards, not with points, but actual Bitcoin. And they had this crazy chart where they showed how much more the people now have in purchasing powers. They have in purchasing powers outside of, so like, they showed how much more the people have in purchasing power because they got Bitcoin as a reward, not points as a reward. And this was an amazing show for me. It was like, yeah, you should get Bitcoin back and not, how should I say it? You should not get random points back. Random points are the fiat system kind of still. And that's yeah, really cool. Bitcoin rewards aren't taxable. So that's free income. I love that. Robin is too smart to not to be Bitcoin only. Yes, I was not Bitcoin only in 2021, but I learned within like, I think 7 months I had the tokens and Ethereum, and then I got rid of everything. And I was like, it's Bitcoin only, nothing else. I think end of 2021 was the point where I was like, I'm all in Bitcoin. Bitcoin rewards aren't taxable. Very, very true. So this is kind of the thing I wanted to show here. What else do we have? We have a lot more Bitcoin. Just in Bitcoin addresses holding 100 to 1,000 Bitcoin just hit a new all-time high. This is kind of showing me. So this is interesting because it not only shows that bigger players are coming more and more to the scene and diversifying also in this Bitcoin sphere, but it also just shows that the network itself just grows. So I just wanted to throw that in there because I think it just fits nicely into the theme of the whole episode where we see institutional buyings, and this is kind of data that supports that to some extent. And then I have not a lot more. This was an amazing cool live stream. It's about an hour 11 already. Really, really cool. I originally planned for doing those live streams about half an hour. I was like, just let's go quickly live, put like something on there. But this turns out to be a lot more fun than I originally anticipated. And so having this live stream is something that over time I'm getting super bullish on. And I thought about that literally just today. I just might tinker around with also doing live stream podcasting. So doing the podcast, the interviews also with you guys together as kind of like I interview live on my channels and you can also watch on that. And later it gets like polished and like gets out as a nice podcast, but having the experience of also having basically fun together while watching the podcast as it is produced. Because sometimes I heard like, oh, like the podcast is like a week old or a few days old or maybe even like 2 weeks old. Some of the things are not up to date. So I think it would just be great to get a real-time thing. So I might just do that more and more. So thank you so much, everyone, for being here. I really appreciate that. I couldn't be more thankful for having you guys here engaging with me. Thank you so much for everyone that joined the live stream today. As always, I'll be back tomorrow with another episode on my podcast, and I will be back on Friday with another live stream. So I'll be back. Bye-bye. This content is for educational and entertainment purposes only and does not constitute financial advice.